What's up everybody, Tom here with another video. We've just had the Fed announce their tapering, and in general, it is completely in line with most of the expectations of the market. As we mentioned in yesterday's video, we talked about the fact that in 2013, the Fed did something, but they shocked the market. They had the taper tantrum, of course. This time round, they signaled what they were going to do, and it looks like they're going to do exactly what they said. We also have Fed's pal bringing in even bigger news, saying we could reach the maximum employment by mid-2022. Obviously, he's very bullish on the economy. The market will move towards inflation concerns now, but we've just had a massive move out of one of the major indices, and we'll be talking about that in today's video. Lots to talk about, guys. I hope you stay tuned. See you soon. All right, everybody, and here we begin the market recap for the markets closed 3rd of November 2021. And we talk about Tesla, all-time highs hit, Amazon waking up from its slumber after the mediocre earnings and, of course, bad guidance. And then we've got Apple going through ahead of the dividend with 150 being smashed and broken above. We've got all of that and more in today's video, including S&P 500, Nasdaq, Bitcoin, Ethereum, and other things. So what next begins on the market? Of course, we've had some big bullish moves over the last couple of sessions, and this was no different. Take a look at IWM, the Russell 2000, as we signaled the other day, looking for that breakout, coming through with a great day trade here after the Fed's announcement. And in general, we have the Nasdaq leading as well, 1%, S&P 500 0.65, and Dow Jones 0.29%. Nothing really was safe from the Bears. The Bears tried to get involved. They couldn't get anywhere there. So it's another real story of when this market ramps, the bulls just take full control, and it seems like it will never go down again. But in today's video, we will be talking about whether the market's getting a little bit carried away into early November trade. XLY, consumer discretionary, the biggest and best sector, and XLB, the materials, and IBB, the one I was talking about yesterday, biotech, coming through with the goods. I really like the biotech sector at the moment. I think it's been underappreciated for a little while, and it's starting to heat up as well. So there's plenty of opportunities in this market. There's plenty of course, things that you can be looking at. We also want to look at the earnings beat data at the moment, and as you'll notice, we're still above 70%, which is good for the fundamental side. 74%, 915 beats this earnings season, 323 misses. We always want to look at that number. Above 70 is good. Too much under 70 means there's something a little bit bad about the current earnings season. And speaking of earnings, we just had some big ones come out for companies like Roku. Not so good, it looks like, in terms of the guidance moving forward there. And we had Fastly, the aftermarket. If you're watching the stream, go back and watch the stream video I did. We were kind of yelling at it to get to a certain level, and it certainly did in the post, and then of course dropped straight back down. We have big announcements coming out on the Thursday as well. We've got Moderna, we've got Square, we've got Pinterest, Uber, Airbnb, Cloudflare, Peloton. You know, a huge hyper stock day is Thursday's session. And join us for the close, and make sure you subscribe to the channel if you enjoy our content so far, because we will be covering all of those stocks after the close. And I think they're going to be some pretty ferocious fireworks there. Other things that are going on right now, and we mentioned at the beginning, is everyone's super bullish. Everyone's feeling great about this market, but should we really be feeling so great? Well, let's take a look at the season acts, which we've been watching for a while, and you should always look at stats and overlay them with your technical analysis and with your concepts on the market. And you'll notice that in most of these November seasons, which, by the way, this has been working out very well this year so far, the pullbacks, everything's been very consistent, that we have that little bit of a ramp early November, followed by a mid-November slump coming into the 12th, followed by, of course, further rampage. And if that is what's going to happen, which I think it may, we'll take a look at that. And one of the reasons why it might happen is because of the fear and greed index. We are now reading an extreme greed number up from 78 to 82 over the last week. And if we go a week ago, it was 63. And a month ago, of course, it was extreme fear. So it's a big switch very, very quickly. There's some other things that are kind of weird about the market right now. Take a look at the junk bond demand. The spread is getting lower and lower and lower, and it's actually just gone to a new all-time low, the spread difference there. We have safe haven demand going up a little bit, but I think the one that I'm looking at is the put call option. So during the last 5 trading days, volume in put options has lagged volume in call options by 64.12%. as investors make, of course, bullish bets. And this is some of the lowest levels of put buying seen in the last 2 years, and that indicates extreme greed. And this is one of the numbers that we always look at. Put call ratio shows us a bit of a contrarian indicator. Remember, if there's more puts in the market, what's less likely to occur? It's less likely actually to drop and pay those puts out. Now, a lot of people think, oh, but more puts will mean there's more downside pressure. It seems to be contrarian. I've traded the market for quite a few years, and I usually look at it this way instead. So we're getting back down. Look at this. Very low point here occurring, and possibly something we might want to be looking at. Let's now take a look at the PCC. We're getting back into that 0.661 area. This is an area where we start to pay attention to the PCC again. We start to look for technical resistances on the indices. It doesn't necessarily mean, oh, yes, we should short the market or anything like that, or expect the dip. But when the PCC is low consistently, it can begin the ramp, of course, in this case, of fear. And then, of course, more puts come into the market. The VIX is also incredibly low fear. This is the VIX, or fear index, as many people see it. We're back at 15. We know 15 has been a pretty strong number for it in terms of where we've got to and where we've bounced off so far. For VIX traders, they'll be intently watching this throughout the Thursday, Friday, and next week's sessions, seeing if they can get an opportunity. So we've got that right down in this zone. And we also have the US 10-year breaking out a little bit here. So what that means is the market basically has seen what the Fed's done. They've seen the taper. And just like last time when the tapering began, it spiked the US 10-year yield. So we've had a decrease in the market. You can see this downward trend line. We've got a base, another base. It's broken out. And now what we look for is we look for it to break through this zone and effectively create a double bottom, which allows it to then ramp into the next zone, which is going to be that 1.75. Will this put downward pressure on the Nasdaq as well? We know that if yields rise, as in 10-year yields rise, that tends to hurt growth stocks. It's another warning sign that in the future, we may hit a technical resistance that might cause a small dip or blemish in the market before a continuation through the November-December period. And we're certainly not calling a crash at this point. Far from it. It looks like we're going to be going mostly bullish into January, February next year into 2022 at this stage. Let's take a look at US oil. Pretty bearish close here. This certainly doesn't look as good as the rest of the markets. We have been kind of thinking this for a bit. We've been talking about that 86. Just before 86, we saw that shooting star style candle. It fell off. Found some buying pressure here, but was unable to buy off the same zone of $80.80. It bounced first time, second time, and then it's closed below. And this opens up the idea that oil may now retreat with OPEC meetings, etc., back into $77. Find the 50 exponential moving average as some form of support on the daily, and then bounce back up. And then hopefully you get your 92s and your breakouts from 85. We'll continue to watch it. It's been a great short, a great trade in general. We obviously saw an amazing ramp over here that we got involved in, and this indicated some serious gains. And it's all happened so far. So we'll continue to cover oil when it's important, and we'll watch whether this is weakness and further weakness coming into the 77 zone. We'll definitely follow that. Before we get into the indices and the ones that are broken out, let's take a look at Tesla. All-time highs here, guys. Fantastic stuff. Let's take a look at the 2-hour chart. The 2-hour chart, we're still looking for that 20 exponential moving average. We're following price based on this one at this stage. It's very aggressive, as we know, Tesla at the moment, and a new all-time high. Let's just take a look at that. Wow, look at this, $1,213. I've seen it higher in the post, but this is the highest close zone. And some people will now take the distance here, extrapolate this out, and then say, okay, that's my new target from a day trade perspective. They're looking for that just underneath 1300 mark. That'd be pretty amazing. And it looks like at this stage, Tesla is still fairly bullish and fairly long. You'd be brave to short against it at this point in time. Very strong stuff coming out of there from the automaker and robotics company, I guess we call it now. Apple, 151.49 through the 150, guys. Oh my goodness, how long did this take? And you might say, but Tom, it went through over here. Yeah, that was ahead and during the earnings day I felt that was a bit of a fake move, and it certainly was, because it instantly came out with earnings and broke straight back down. 151.49 ahead of the div. So what's going to happen is probably the div will find a little bit of weakness. We notice the div over here, a little bit of sideways action, and then a continuation of the strength. Maybe we move up, people want to collect the div, comes back down, tests the 150 from the top, and then we get that ramp into hopefully like a 165 by the end of the year. This is still a bullish sign for Apple. It looks like there's at least a little bit of volume there, not as much as I'd like. And in general, as long as we consolidate above 150, it's still very bullish. 20 moving average starting to come up now. 2050 obviously crossed on the daily, and a very important zone broken through. So I'm sure a lot of people are getting a little bit more bullish on that pair. Let's move over to the first of our indices. We'll talk about the Russell 2000, and boy, oh boy, what a breakout, what a day trade for this one. Starts heavy in the morning, just went bang, new high, completely busted through. Very big trade here coming in for IWM, and now we get to talk about the eventual potential of this, the big channel. So we've been stuck in the Russell. If we take February at the start of 2021 all the way to now, it's almost done nothing. So it's been sideways for a long period of time, coiling, channeling, getting ready for the next big move. You take this, which is what we call A, and then that usually is extrapolated out as what we call B, and this is of course a channel style take profit, and it brings up just before 260. And we already mentioned that this is a much higher return than what's currently expected from the S&P 500 and Nasdaq over this holiday period, the Thanksgiving into US into Christmas sessions. And big breakout, definitely huge on the daily. Let's take a look at it. No disputing that it's closed above, and this is very significant. I would also like it to close the weekly above, because the weekly is the most important time frame really when it comes to market indices and market breakouts. But at this stage, it's certainly looking quite big. And the next thing we start to think about was, well, how do we get involved in something like this? Will it pull back? Generally speaking, you get a pullback. So a lot of people practice scaling. They'll take entries here, they'll take entries on pullbacks, they'll take entries on breakouts, and then they'll look to scalp and day trade their bullish intentions of the channel throughout. And that's how they make more money from the position. They basically look to really understand that they've got a bias. That bias is based on TA, based on some seasonals, based on some good concepts, and then they take that moving forward. And if we look at the seasonals, we've stated this quite a few times, we have strong movements. 80% of the time, the IWM is bullish over the month of November. It's still very bullish over the month of December, and then it really drops off hard over that January, February period in terms of stats. So we'll be cleanly watching this, obviously looking for the gains over November, December ideally. And if it does hit the top end, then maybe you have a technical take profit that you can bring into your own system and obviously work out. We move over to the S&P 500. Nothing's really changed here. Still looking at strong gains. We do think that it should come back to this daily 20. It's actually sitting right around a perfect zone in the future. And if we get that Seasonax data, remember, it's kind of saying, well, maybe not today, maybe on non-farm payrolls Friday or next week, we might actually hit the high and start to dip a little bit in anticipation of that mid-November dip. Should we see that? I mean, will we have it? I don't know, but I certainly am hoping so. So ideally, we would hit the top of this range. And we've talked about this trend line to death now. 1.15% is all it's away in terms of, you know, gains. We're really, well, on the upside, it's probably about 1.2 something. But really all we're doing is we've got a monthly R1 pivot here. We've got our overall longer term trend line that's come through. And if it hits that point, do we expect selling off there, considering the extreme greed we're seeing in the numbers, considering the PCC, considering the time of the year? Yes. I mean, you would think that bringing together enough of that information is being big brain and hopefully making a pretty good decision. But it is tough to bet against the markets at this stage. I mean, very bullish. You can see the aggressive trend. And in my general gut instincts, I would go with, if it hits these levels, we see that turnaround, then we're looking for the 20 or even the 50 exponential on the daily. Not a full correction or anything, just a pullback to those areas. Nasdaq's very similar, top end of the ascending channel. We've seen this be a very good indicator of the market starting to find weakness, and it's sit up there for a little while. Obviously, it sat over here and it kind of took quite a few days to then roll over, but it was pretty accurate, and it's a very similar kind of scenario as what we're seeing right now. So let's find out whether this top end, which is now only about 1% away, will happen, and then will it find weakness, or will it just bust through and keep going into the end of the year? I hope it finds a bit of weakness here. It would be much healthier for the market. Even if you're long, you kind of hope it does. You don't want it going ballistic and running away on us again. Let's have a look at Ethereum and Bitcoin and what's going on there. Look, ETHUSD still the strongest between it and Bitcoin. Bitcoin doesn't look like a chart like this. This is the weekly, pretty large movement. We still have that tweezer bottom that obviously found some bullishness, a little bit of a long leg doji, looking for hopefully a decision made above it. We've got daily 20 as well as a pretty interesting pullback zone in the future that, should you be bullish on this pair, you might be looking at. And we've really seen a huge move into quite a few alts now. A lot of altcoins have really been running over the last 48 hours. And I think a lot of that's because altcoin season's starting due to the fact that Bitcoin has started to consolidate. People are moving their money and they're starting to say, whoa, I forgot about where this was back in July, back in March of this year and May. Let's take that one to the moon again, and then we'll move around. And you know the game. If you've been in crypto for a while, it's always pretty similar. Downward trend line was broken through by ETH-BTC. This is the ratio of ETH in valuation to BTC, and we expect this to kind of get towards that 0.08 number. And hopefully when it gets there, we're hitting a 5,000 plus for Ethereum. So that's going to be another interesting one. A few people have asked me to comment on ADA because Cardano's been frankly terrible for quite some time. And I think we've got two things really playing out here. We've got this daily 20 exponential moving average that seems like the coin can't get past it. We have found a bit of a base, long leg doji decision above that, which is good. We need to get through this 20 moving average, and I've kind of talked about the 230 being the real participation phase. But if you like Cardano, it's starting to get a little bit better from the bull side. Not quite yet, but certainly right there. And volume's definitely increased, and overall sentiment looks much better than it has. So daily 20, something I'm looking at. Daily 50, obviously we'd love it to get past there with a close. And a lot of people are thinking 220 and 230 is when they're getting more interested in this pair. So Cardano, one to watch in the markets at this stage. We've got some data that's come in here from Ian again in the Discord community. If you want to join the public Discord community, you can do so in the links down below. And obviously we've got a private group as well. And what he did was he actually pulled out the likelihood of certain percentage pullbacks over years in terms of a percentage per year. And you'll notice that while it's very likely you do get a pretty substantial style pullback, like it's at least very likely as one per year, the actual likelihood of these deeper pullbacks in terms of drawdown size, 8 to 11%, etc., is a lot less. So whenever you're thinking of being a bear in the market, remember your likelihood of being successful at picking the next 50% crash or 30% crash or even 18% crash is very, very low. And more likely you're getting that 5 to 8%. So thank you very much for sharing that. And I hope it's okay I popped that in the video. We've also got unemployment rates and other things coming out for some of the majors on Friday. We've got unemployment rate coming out for CAD. And then, of course, we've got the non-farm employment change numbers. This is the one that everyone, the market looks towards now. How good is the US in terms of jobs? We're going to find out, and we'll see whether Papa Powell is happy with that number. And, of course, whether he continues to do all of the things that he really can to make sure this market goes up. Thanks so much, guys. If you enjoyed the video, please remember to subscribe, smash that like button, and I really do appreciate, and we really do appreciate your support through the live streams, through the daily videos, and your comments and smashing of the likes down below. I just want to say a big thank you to you. We're almost at 70,000, and that's thanks to you guys spreading the word of what we do here on the channel. Appreciate it. See you in the next one. Bye for now.